Hi everybody, Adam Collingwood, Financial Traders Cafe. I've got 3 words today, and that is bonkers, bonkers, bonkers. I just can't believe the way that the markets are going at the moment. We're just looking at a chart of the DAX German 30. And we can see this huge movement, this breakthrough, the resistance of 10,116, and it's flown up past that now. That massive rally, where its highest point that it's reached is 10,986. This is absolute insanity, but the markets will do exactly what they want to. Lots of funny money being printed, as you know, with Draghi and his 60 billion a month that he's decided to print because of the failing euro economy, so he feels that will actually help things, and this is one of the things that you're seeing as a result of that. So don't go buy into it, it's all overinflated, but the markets would do whatever they want to, so people are going to get sucked into to the shift up. Now, what I just want to do is just show you something that is at a very dangerous level from a financial perspective. And this is the 200-day moving average. And what you can see here is the 200-day moving average is 9686. So that's that today. And the price, the moment closes 10941. Now, if you divide one into the other, what we're talking about is a 13. I know this is shifting around a bit, but it was 13.1% difference between the 200-day and the current price at the moment. Now, if you go back to any point where there has been a significant move upwards, one is here, which is September the 10th in 2013, and you can see it's just kept moving up nicely above the 50-day, and eventually, as the 50-day is moving up, is going to pull back to it, and then eventually it will pull back to the 200-day. But the difference between, say, the highest point here before the pullback, the proper real pullback, was about 11%. Okay, from there to there, and so you can divide the price at that point, the 200-day moving average, so you can see what the difference was. So that was about 11%, and I can't see where it's ever been more than that. I mean, that was really high. I mean, 7% difference between the current price and the moving average, the 200-day moving average, you know, 7% or whatever, you know, it's acceptable. So where there's this huge gap, it usually likes to eventually come back to the mean. I say usually, it does always come back to the mean. We never know where that bit is going to be, but it does like to come back to the mean. And where there is a huge difference between the 200-day and the current price, that's very dangerous. I just feel so sorry for people that are investing in ISAs, pensions at this point. I mean, we're in February at the moment. In the UK, you're going to have ISA season where everybody starts investing. You've got the election coming up, and people are just going to be buying into this and buying at real high levels, and so what's going to happen? They buy there, and then it just falls back. Now, I'm trading the market, so I can go short on this as it comes back, but if you're buying, say, even just a tracker, I mean, this is just looking at the DAX, but if you're looking at a FTSE 100 or the all share index, it's the same. Whether you look at those charts, it's the same. I mean, they're just flown up, and my concern then is that people are just buying at tops, you know, and they do it over and over again, and then the big boys, what we know is they're piranhas, and they will come in and they will strip everybody clean. Those that are trading this on going long on this, they will strip them bare. And they do it time and time again. Everybody's suckered into this huge move. When something's overbought, then it's got to come back to its mean. Now, if you look at the relative strength index, you can see very clearly there. For those of you who don't know the relative strength index, when it's actually it starts to exceed the 70 point there. We saw one happen back in November to December before we saw the sell-off, but it continued to stay and level along there until eventually it sold at that point. So you could have shorted that there and done well. And again, we've got these two peaks here. It's not to say that you sell now just because it's hit that point. That's what novices do. We don't do that. We have to have all our ducks in a row and actually see the movement happening. You're seeing the sell-off happening. You're seeing the volume of selling happening. Okay, we can see at the moment, even the MACD, it's still moving up. It's starting to, these two lines are getting closer, and we should start to see this moving south. Okay, we should see. That doesn't mean we will tomorrow or the next day. It could happen today. We don't know. We never know. But what we can only do is we can only sell or buy on what's going on. Okay, so here, let's go back to the 200-day. There it is, and we can see its highest point there. So I have actually plotted on here as well the expansion from Fibonacci for anybody who has attended any courses or knows a little bit about Fibonacci. I've plotted the trough there, which is in October, to the peak, which is this point of 10,116. So the difference between there and there is 100%. And then what we see is when we expand that out, we're looking at significant levels for the price to reach. So the first one is 23.6, the next one's 38.2, and the next one's 50. And we can see it's shot past 38.2 up to the 50. So as I say, bonkers, bonkers, bonkers. This is just absolute insanity. But it does what it wants to do. You can't turn around and say, oh, well, I think I'll sell it now because it's overbought. What happens if you think sell it there and then it carries on rallying? You know, you can't just go on that. You have to actually trade with what you see and pick your moments according to the trading system. So we're going to start to see a little bit of a tail off here there, so we can see that's just pushed down. So we had this consolidation all morning before this just coming down a little bit, but don't be sucked into that. We could see it come back down, but there may be a rally upwards, so just be careful of selling at the moment. One of the first levels really is about here, about the 10.9. This with it bounces off this, it could then start to rally back up again. But we are talking about this over a longer term, eventually coming back to its mean. Okay, and the first one on the 50-day depends really. I mean, people like 150-day averages, 16-day averages. Depends on what system you use. But I've got plotted on here the 50 and the 200-day. So that's where I like the 200. It gives a more realistic picture of what's going on over a 200-day period. Okay, and we can see there that it has changed dramatically in this last week, from flying up from this level here where it was consolidating up to here. Okay, but that's going to come back. Watch out for it to come back. Be careful not to get suckered in too early, but just there's great opportunities here to short. Just follow the system. There's going to be some great ones, but just follow what the big boys are doing, where that volume trading is going. Just watch that, and then you can grab hold of their coattails as they start selling off and banking all their profits from this surge up. Okay, so hope you found that helpful. Say 13% difference between that to that. That's pretty high. It's got to come back. Okay, you take care now, and I'll speak again soon.